Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on gold market. So in general, we've got the drop right to the level that we have specified around 1918. So the 618 pullback has happened, but currently we have few interesting moments. So in general, as you can see that markets across the board are really going crazy after the Fed statement. So definitely the topic of the United States debt right now is spinning up. So lots of headlines in the news you could see, such as even you could see that United States debt has increased for the 50 billions just in one day. So and so on, and it seems that investors start thinking and suspect something, just because you could see what's going on the 10-year yield. Sorry guys, this is quotes for the options. I will show you on the 10-year yield. You could see what's going on. So market is coming to the 4.5%. And it doesn't suggest to stop. So actually, which is also totally corresponds to our long-term view, we suggest that it should be around 5%. And yesterday, we have posted this in our Telegram channel. The Vanguard analysis said that they expect 3 more rate hikes from the Fed. And all other big banks just postponed their forecasts in a more hawkish view. So Goldman Sachs has increased the length of the time where a rate has to be high, and other banks have done the same. So all this stuff tells that markets finally start getting some evidence on what's going on and start preparation for really high rates. Also, things that we have talked about, the inflation 2 weeks ago and rising of the hydrocarbons prices, now is becoming reality. And it also makes investors nervous, be preparing for higher inflation levels in October and in November. And all this stuff, drop on United States treasuries, it's actually becoming a big problem. Just because you know that the treasuries are the major collateral across the globe. And when the collateral value is falling, investors have to get money somewhere to fulfill the margin obligations and to fulfill the margins to initial level. That makes two things. First, it supports the dollar just because investors need dollar and they buy in dollar to increase the margin. Second, it pressing on all other assets. It's just because to get the dollars, investors have to sell some assets, stocks, even Bitcoin. You can see what's going on across the board. And you can, for example, DAX yesterday collapse. S&P yesterday collapse, and this collapse is not based on the valuation of the stocks or something, maybe by this reason as well, but big part of this stuff is just running for liquidity. Also, I will put today a bit later in the Telegram that Fed has got out of the market approximately 50 billions this week. It's really big quantitative tightening step. So all the stuff is pressing on the market. At the same time, you could see what's happening on the gold. So return back to the gold. Market has collapsed, but it still stands relatively stable. And you do not see it on a retail broker chart. For one second, we're returning back to futures. Just to identify the grabbers that have been formed. First grabber we've got yesterday. And today, as you can see, we could get another one. What it tells us? It means that in the current moment, with this performance, we are not considering taking the new short by far, despite that overall environment suggests that maybe the gold might be downward action, but gold, guys, is absolutely different stuff. In the rising of the political risks, we are coming to the deadlock of the government on the 1st of October in the United States. So it's rising risks. It might be absolutely different action. And as I said many times already, if you see that the gold rising together with the United States dollar, it just means that all things are becoming worse. Worst thing have to happen. And this particular, the price action that we see right now, trend remains bullish on the gold market. With these grabbers, it suggests the taking out of this top. And as I said yesterday, why not? Maybe we could get this butterfly with the OP around 1970, and it's also 127 extension of the butterfly. It just means that something is going to happen around 1 week or so, because for this rally on the gold market, with the background that we have, you understand that something has to happen. Because on the bearish background, gold can't show the rally. So obviously might be something external. And from that standpoint, I wouldn't consider taking the new short positions by far. On the 4 time frame chart, take a look. Market indeed has collapsed to the 618 support, but as I said, here it was very difficult to find the points where to take the position. It's just because it was mostly kind of the just collapse, and you could just jump in on the running trend because we haven't got any meaningful pullback for position taking. Now we have this retracement. And this retracement actually is a major thing that we need to keep an eye on. And I explain why. Because take a look, if market will hold these lows, forming just minor retracement here, say to 1920, it tells that the bulls are find the bottom. And it might be some just starting point for upper continuation. Because we have the grabbers, which is actually very important. They potentially have the chance to erase all this collapse. For the bears, it also will be very important because if you will consider taking the short position, we have the significant drop, you might consider taking the short. That's also the level that you will have to keep an eye on, because if market will not break it down, it tells you that probably downward action hardly will continue, and you will have to think about the closing position. That's why this retracement is very important for both sides. So if you would like to take the long position based on the grabbers, you need to watch for these levels for position taking with the stops below the grabbers, and just see what will happen in political and economical life next week. If you're using this as a momentum trade, so you probably could consider taking the short position, some downside action based on the momentum. You also have to keep an eye on this level, because that will be the key to decision whether to close position or not. If market will stop here and start turning up again, you will have to close, because it means, well, I already explained that. So that's what we intend to keep an eye on. Decide what the side you would like to take. Speaking about short position, I wouldn't consider it if you trade on the high time frame. So for scalp trading, if you're trying to catch that this retracement, it's okay. But if you are planning to take the short position on the gold on the high time frames, daily, weekly, this is definitely not the points, because in this case you will have to wait when the grabbers will be erased and market will drop below them. Only in this situation it will be, well, relatively safe to consider taking the new short position. Until grabbers are valid, I wouldn't consider taking short position on the daily chart, only on the intraday charts right here. That's what we have from the gold. It's become really interesting, and well, let's see how the going.